Good afternoon and welcome to the Blue Line Metals Edge here for Tuesday, November 23rd. I'm Philip Strebel, Chief Market Strategist at Blue Line Futures. Looking at the markets here today, big sell-off across the board in all the metals here. Not no area really to hide on as far as precious metals. You go to the Morning Express, we do highlight a few different charts here, a couple of key levels of support, but when you get these thinner markets, panic liquidation, the margin clerks are not going to let anybody go through the holiday, through the weekend, holding anything on margin call. So that panic liquidation, I think it's set a bit early here coming into this. And this is not unusual at all. So looking at gold here, we're heading into that major three-star support. 1785.30 down to 1781.60. If you pull up the chart, you look at gold, that's going to correspond with today's low, the key level support, and it also, if you look at and you start connecting some of those tops, that's where that trend line comes in all the way from last August highs. So looking at gold, if you're going to do it, you got to come up with a plan. You got to have some stop out points. I think closing below 1685, that would be a big concern. We might see massive sell-off beyond that point, but I would also anticipate large level of support there. So use that as your floor, and I'd say start building into positions, use those 10-ounce contracts or the right contract given your account size. Now looking at silver, big sell-off. Again, margin clerks coming in, pushing a lot of people out. You get it down about $1. We also had option expiration, and it was really ironic that 1800 was that largest strike on those options, and I really think that some of that selling was to push below to get those to expire worthless. So they really cleaned those out, and also the $24 calls cleaned those out on silver as well. So I wouldn't be surprised if we don't see a snapback after today's sell-off. You do have stochastics rolling over. The strength of the downward trend has been picking up, and the volatility on silver getting quite high. This is one of the highest levels we've seen in quite a while. If you look at futures performance, you go to the daily performance. This is another website I use, FinViz, for performance data. You can see worst performing commodities of the day: silver, platinum, palladium. So not a great day on the metals front. You go year to date, you can see silver has been one of the poorer performing commodities. That's why we believe that there could be a snapback here that's pretty aggressive. So you could see that they were selling safety, the Japanese yen being one of the worst performing currencies. You could also see that platinum is one of the worst performing commodities as well year to date. So that's also built behind that automotive, the shortage on the semiconductor chips. Now, if you look at some of the blogs and some of the stories out there, it's gold's fourth straight decline, matches the longest skid in nearly 7 months. So we haven't had that big of a sell-off where it's been 4 straight days like this. And I would think that tomorrow would be kind of the last of it. You go to the economic calendar, you got GDP coming out, you also have durable goods. You don't want to see these numbers come in much bigger. That's where you're going to get that capitulation point on the metals. And then also you do have the FOMC meeting and the minutes of that meeting. Sorry, just the FOMC minutes. You can see that more hawkage than expected is good for the currency. So when you go back to the currencies here, the dollar index continuing to push up, that's going to put pressure on the gold market. Another thing that'll put big pressure on the gold market is 10-year treasury yields going up. So you can see that treasury yields punch through. As this goes down, yields go higher, and this is going to be your largest rise on treasury yields that we've seen since this big move going back for several months. So we just haven't gotten that high on yields, and these are the highest levels. So it's kind of a rude awakening for gold. And again, like I said, you really want to structurally stack in orders, come up with a plan. So I'm probably going to I didn't write a Kiko article last week, but I'll write one this week, and we'll probably layer out some positions. Platinum, I think that totally went on sale today. Big breakdown on platinum. A lot of talk about COVID, lockdowns, slower global growth, slower demand, and people just aren't going to be out buying cars and things like that. So with countries going on the lockdown, you might see those production numbers out of like Volkswagen, Porsche, and a lot of the foreign auto manufacturers. They may take a dip where U.S. auto manufacturers would most likely pick up. So I really think that if we could scale in, some people 1050, 1000, 950. I think you build a position. I don't see platinum going back below this level right here, and I think this is a really long-term gift. Remember that contract size at $950. You times by $50 per. It's $50 for every dollar move because it's 50 ounces. It's about a $45,000 contract. So you got a larger account. You're north of six figures. I really don't think you have to panic much on one or two contracts right there. And then looking at some of these other markets, cattle, we took a lot of profits on cattle. It coming up, punching through to a new high, and also coffee market hitting that new high. Remember, if you have any questions on futures commodities, give us a call. We'd love to help you. Leave some comments below. I can give you some of our levels as well. Remember, futures and options trading does involve risk of loss. May not be suitable to all investors. Good luck and good trading.